Hey traders out there in trader land, this is the weekend edition. My name's Dez here at Grok Trade. This installment of the weekend edition is good through Sunday, May 13th, 2012. And all the news talk about JP Morgan. JPM, take a look at this, down nearly 10% on Friday. Big gap down, but we did stop at the rising, or slightly rising, almost declining now, 200-day simple moving average, acting as support on massive volume. On the weekly chart, a sizable drop below all major weekly moving averages. Big volume crossed over the zero line. And on the monthly chart, all major monthly moving averages heading southbound. And volume should start picking up. I mean, we're only first week into May, going on the second here, and volume has already trumped last month's volume. Interesting. Anyway, on Friday, Dow down, S&P down, NASDAQ slightly in positive territory. Russell's down 0.2%. Banks down 0.73%. VIX up 6%, knocking at the door at 20. Gold down again. Silver down again. And crude oil down again. Look at this. Down nearly 1% on crude. U.S. dollar trickling northbound. And taking a look here at the S&P daily. Thing is, we had a good chance of having a hammer, an inverted hammer, to go north. That did not happen. We stalled at the falling moving average. It's an EMA. My 8 EMA coming down here. Active resistance come down and building a low base. But we do have support at the rising 100-day moving average, so all eyes are on that right now. But we're seeing relative weakness, gang. We should have been bouncing. We're not seeing that. That's no good for the bulls. On the bears, we are in sizable trouble on the weekly, or as far as the bulls are concerned. Bulls could be in sizable trouble. Bears are going to love this. But on the weekly chart, we have now a confirmed double top on the weekly pattern. We have this big M. M stands for murder. We do have a close lower than this low. And we also close right at the rising 20-day moving average. But as far as the textbooks are concerned, this is a confirmed double top trend reversal. And we are almost ready to cross the zero line down here on the MACD, something to be watching for. On the monthly chart, check this out. For the month, we have a lower high and a lower low. So we are in the midst of a down leg getting started. After this huge up leg, we're ready for another down leg. So all eyes are on this. We could go into a big time bearish correction, here fairly soon. So be watching for that. On the Dow, we have a higher low on the monthly, equal highs. That equal high gives us a tweezer reversal pattern. On the weekly chart, we have a confirmed lower low. We're now closed under the weekly 20-day moving average. 20-week moving average. And then on the daily chart, we are down below the 100-day moving average. We closed below it on Friday. And NASDAQ has a low base, very, very choppy on the daily chart, 100-day. We're watching this. The EMA, exponential moving average, is coming down. We're getting pinched. Look for a big move one direction or the other. The weekly, we go down, 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 down. We have a doji. So the weekly gives us an opportunity to find some support and a bounce. This is a nice bull pullback, kind of ugly with this chop right here. But we have a doji that closed above the rising 20-week moving average. And we went down, made the low at a major, major trend line right here. So we're finding a lot of support, nice bull pullback, and we have not crossed over the zero line histogram on the MACD, so we could get a nice bounce. The monthly chart, on the other hand, tweezer top, lower high, lower low. Whoa. Woe be to the markets. This could get ugly and fast on the larger time frame. Let's go to the banks. Banks monthly it's holding its own, gang. We have what's called a bullish pennant. If you haven't seen that, go to the chart school there at freeonlinetradingeducation.com. You're going to see down here a web URL. Just go to the chart school once you're there. But check this out, a pinching pattern. This can be very explosive, one side or the other. If the banks get explosive to the upside, the market should follow. On the weekly chart, we have this resistance, support, 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 support. We haven't started breaking down yet. So we have relative strength as far as the banks are concerned. On the daily, on the other hand, we're below a major trend line, building a low base, below some major moving averages. Gold, for all you gold bugs out there. Now check this out. We have this falling wedge. The falling wedge with the MACD that we have here, kind of a bullish divergence, but we started dropping again, so not so much. But check this out. We're dropping on dissipating volume, but we're at a support area. If we go back, we have resistance. We come over here, support, 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 and major support. We have a really good chance of gold starting to go northbound. I'm half tempted to try my hand at GLD again. Up here, we thought we were going to start breaking out and never come to fruition on the weekly. Breaking down, low base, boom. We have a nice area of support at 151.80, so be watching that. If we get down to that area, it could be a nice area to look for some purchasing. On the monthly chart, this is problematic. We are now below a major trend line on the month. However, finding support at the 20, it could be very realistic to see this rally back, rally back, rally back, closing at the high, giving us a nice hammer, and then it rally from there. So if you want a chance to get in on a low of the gold right now, this might be an opportunity. No, it could be risky because we have broke down. You need to look for some bullish reversal patterns on the technicals. So you have to be watching all time frames, not only the monthly but the weekly and the daily, and looking for those technical analysis and those indications to know when to get in and when to get out. VIX on the monthly, support, support, we're at support, we're going higher here. We have some moving averages, so if this starts to pop, that means the markets are failing. Here on the weekly chart, nice support, we're just starting to head higher, but this could turn into what's called a bear flag. You drop, 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 little bear flag waving in the wind right before it drops yet again. That means the markets would be going bullish. So far as the moving average is concerned, on the daily chart, we are chopping around above all major moving averages, so it's more bullish than it is bearish. Remember, the VIX is the volatility index, or the fear indicator. When this goes higher, the markets are going lower. When the markets go lower, the VIX goes higher. Now, let's take a look at Apple. Apple, not too bad. If I were to draw a couple lines here, we would be looking at something like that and something like this. And it looks like an ugly trend line. It's not ugly at all, actually. It's spot on. Spot on. Very advanced way of drawing trend lines. And if you go to the line chart, resistance, resistance, support, support. Nice triangle. This is called a big bullish pennant. Big run up, bullish pennant. These are more bullish than they are bearish, and we're undervalued on Apple, so it could be a good opportunity. But on the daily, we are making a low base. If we start breaking down below 560 area, be wary of this because this could be in trouble and fast. But if it starts to rally, especially breaking this trend line, you could have a great opportunity to play here. And a shout out to FinViz. I'm in their groups looking for sector rotation for the week. Utilities doing the best. That is a defensive sector. And you have basic materials taking one on the chin, down 3% for the week. Conglomerates down 2.3%, and those are your bigger companies. And your technology down, financials down 1.6%. For the month, utilities defensive sector doing the best. Basic materials and the toilet. Financials down 4.4 for 3 months here. You can see 3 months, consumer goods, services, healthcare, all these are defensive type plays. And you have financials, not doing too bad, but basic materials. Now, the last time we've seen basic materials take a huge hit like this was in 2008, right before the recession cracked the markets. Keep that in mind. We have gold at 1579 and some change, almost 1580. Oil at 95. When you go to our website, you're going to see this. I'm going to tell you a couple things here. We have some upcoming events, 3-day immersion, mentorship. Click on this, learn about it. Send us an email at mentor@groktrade.com. If you want to know about hedging, teachmetehedge.com. Go there. some other mentorships coming up. We have live Vegas mentoring coming up at the end of June. If you want to meet me live and do live mentoring and go to Vegas, that's the time to do it. Last week in June. And also for all you Grok graduates out there, we have a new advanced mentorship. Do not miss it. And I'm also doing a regular mentor and an advanced one in the same week, last week of June. All right, let me introduce you to a new analyst that will be doing a video in futures this weekend by Saturday night. Just click on trading videos, scroll down. Oh, and if you speak Spanish, Miguel Vincent, Nitza Barkey are doing videos. Watch their videos. I'm learning Spanish, don't know it yet. Mark Meerkat does stock videos, and he shows his trades, live trades, and you can learn those. But Matt Ratliff is Abercrombie and Fitch's supermodel. You can Google his name to see his pictures yourself. And he is a superstar futures trader. So he's going to start doing videos on a daily basis. You want to share this with your friends. And Nitza, if you trade the ETFs or the Qs, or not Nitza, but Carolina, you want to start following her. And let me show you something else. Let's go back to the home page. If you don't know about chart patterns, all the ones that I talk about, you certainly want to go to the chart school, but take the 101 courses right here. 101 courses are awesome. But I want to share with you a couple things. A lot of people don't know this, but if you go to the Stock Picks V newsletter, if you want to get a hold of my stock picks each week, let me show you something. You want to go here. This was last week's. And you certainly want to get these weekly updates. Then the Grokstar chat room. This is where you can trade along with us. Here in the chat room, first thing is this is live data. So if you need live information, you can go right here, hover over, the ticker symbols, and you will get a chart, live data right here, live charts. But anyway, free trading chat up here, and then down here is the premium chat. You don't want to miss this. And for the week, 66. So we had 66 positive trades out of 80, which we have a almost 77% success rate, and which is a 10% improvement from last week, up 21% on Tuesday. With those stretch goals, net 121.5% for the week, and these are percentages based off of risk. That's how we're coming up with these. So very powerful, but very fast. You need to be a day trader and skilled and knowing how to. But we call them out. Hey, we're getting in this, getting out of this. So this is you can play right along with us. Get a full month free. All I ask is if you sign up and you're making money, that you continue to sign up and be a part of this growing group. It's a great time. A lot of information down here you can get to. And the 201 trading courses. This is somebody that wants to invest in their trading education but does not want to pay a gazillion dollars to the big educational firms that are out there. So you can take the 201 courses. It is worth its weight in gold. And let me show this to you. Right here we have 5 major courses. Every time you click on a course, you get a whole new series of lessons. It's going to take you over 6.5 hours to go through all this. It's a home study and is top of the line. So this is something that you can save a lot of money, save your money on your books, save your money on your seminars. You're not going to learn to ride a bike in a seminar. So we can help you here for sure. Take the 101 courses if you're a beginner. If you're not a beginner trader, jump right to the 201s. You'll be just fine. Last but not least, Grok Trade Mentorship. Go down here and just watch the videos of our students and just hear them talk about what their experience is on the mentorship. If you like what you hear, feel free to fill out the form and we'll just talk to you about it and find out if it's a match. Anyway, There is my selfless self-promotion, and I thank you regardless if you support us by buying and investing in our trading education, which we think is the best. We do thank you for your patronage and being a part of the Grok trade and the community that we built here. Do me a huge favor if you'd be so kind. I showed you a lot of charts today and talked and gave you a lot of information. Would you be so kind to share us with a friend, with a colleague? Would you be so kind to share us with your trading forums that you're part of and chat rooms you're a part of? By doing so, I thank you. Take care, safe trading to you, and come watch all of our videos from all of our different analysts and enjoy.